Of course, we know that in the U.S., there is a new president that's been elected, President Trump, and that's going to have global implications. This isn't just about the U.S. because guess what? We are all incestuously intertwined. And I'm going to show you how this, or at least begin to show you how this new presidency is most likely to impact you. Because what are we seeing? We're seeing the stock markets making new highs every day. We're seeing stocks that have gained like 280% in the last week. And, I pointed out many, many times in the past how this has really been turned into a risk-on speculation market. And everything, it has been turned into a trading instrument. But let's get specific with this, okay? Because Trump's comeback drives gains in U.S. stocks and the dollar and treasuries slide. So what this means just in this headline, stocks are going up. Why? Because the treasuries are sliding, which means more inflation is anticipated. And I would bet that it's not going to take that long for it to rear its ugly head again. But again, the whole world kind of is tied into following what happens in the U.S. So stocks are up, bonds are down, yields are up, but the dollar is stronger. Okay, I got to talk about that because we hear it all the time. That's just versus other currencies. Have you suddenly gone into the store to see that your dollar buys so much more? And you're not going to either. So let's just kind of dig in and see where we're at, because there are promises that were made by now President Trump. And what are those? He's going to raise tariffs, which is going to create more inflation. And it's also going to give, because the assumption is that foreign imports coming in will be more expensive. And so then the hope is that people will choose to buy U.S. made products instead of those imported products. But in addition to that, what happens is it gives the U.S. products more room to charge you more. So this is very inflationary. He also talks about cutting taxes, which reduces income. And we've been for a long time. I mean, we're running almost $2 trillion officially, almost $2 trillion in deficits through the end of October. That will get worse. What is deficit spending? That's spending money you do not have. So you're spending future dollars. That too, while that is absolutely inflationary, cutting back taxes means that there's less income to work with, which means that we are compounding more interest. So higher inflation, less income, and then slashing regulations. We are going to be talking a lot about this as we move through this administration, because President Trump certainly did that a lot in his first term. So all of those regulations through the Dodd-Frank Act that were put in place after the great financial crisis in 2008, well, they were pretty much destroyed and taken out. Now, Basel III Endgame that we've been talking about and waiting for is more than likely dead. So let's look at these promises, right? Raising tariffs, cutting taxes, and slashing regulations. The bottom line with all of that is risk and hyperinflation. Now, you guys know that I've been talking about the speed at which money changes hands and how that is one huge indicator to where we are in this hyperinflationary game, and that I believe that we're already in the early stages of it. With these three promises, if he is able to push all of these through, and I'm sure there's going to be quite a few that'll be pushed through, we'll have to see as his term progresses, but that's just going to kick the inflation into high gear. And that means you lose purchasing power. So it's going to impact everybody And it also means that the U.S. is going to be exporting this inflation and also exporting deflation for those countries that are going to have to be dealing with the higher taxes. And let's see. There's only one way. Makes it so simple. There's only one way for the governments and the central banks to fight deflation, and that's with inflation. So, I hope you all understand, and I'll be doing a lot more work on this, how we are so interconnected on a global basis. What happens over here doesn't stay over here. It travels all around the world. And one of the places that it travels to is China. So I think this is super interesting because they unveil a $1.4 trillion debt swap. So basically what that means is that debt that's coming due right now, they're elongating the maturity. So they're trying to postpone the inevitable, which can be done until it can't. And I wish that I could be more definitive than that. But Beijing retains fiscal room to respond to any Trump trade war. And that means that what they're really doing is saving that stimulus for Trump. So you see, this is definitely global, and this is going to export and force that global inflation. And how soon will that happen? I think it'll happen pretty soon. So I also wanted you to see what President Trump can do on his own and what he would need help making happen. This is in regard to the tariffs. What he's proposing is a 20% tariff on all imports, 60% tariff on Chinese imports, and 200% tariff on imported vehicles from Mexico. So everybody's going to have to deal with tariffs, but China and Mexico the most. He can do that alone, right? Executive action alone. He doesn't need Congress to say okay, but will it likely be challenged in court? Yeah. Does that mean he can't make it happen? No. So the battle will begin, and it's going to be extraordinarily interesting to see how this comes out. I'd also like to point out, let me grab my little laser pointer. I'd also like to point out that this is the US dollar to the offshore Chinese renminbi. I really should do a piece on, because we were pegged for quite some time, that built their manufacturing infrastructure, and it's really pretty interesting. I don't know. If you guys want me to do it, I will. You can let me know. But you can see how the dollar went up. That's versus other currencies. And the reason why it got strong to the other currencies is because with higher inflation, that also indicates higher interest rates, which is why the bonds went down, right? Here's the relationship. Interest rates, market value of the bonds. When interest rates go up, the market value of the bonds go down. When interest rates go down, the market value of the bonds go up. So this is actually really, really bad for all of those banks that are now going to have even less regulation in them and take more and more risk with your depositor money. Can you see that connection? But it's going to happen all over the world. I'm sorry. It is. And the tariffs are coming. So they increase the cost of the price of the imports. That adds to inflation. It also gives U.S. companies a little bit of ramp room so that, because you're looking at a 60% tariff or 200% tariff on vehicles, they don't have to be higher than them. They can move their prices up a little bit and it'll still seem cheap. You ready for this inflation? It will happen. But if you have gold and silver, you're prepared. So it doesn't matter. And that's the whole point of prepping. All right, I'll come back to this. All right, so Trump's plan to cut taxes on Social Security benefits, make cost beneficiaries, blah, blah, blah. But these are the three things. He's going to, and somebody asked me last week about what was going on with taxes. He is likely to extend those 2017 tax cuts, lower the corporate tax rate from 21% to 15%, and eliminate federal income tax. He's talking about it on tips and things like that. But all of those things require congressional legislation. So we have to see whether or not those things can go through. But absolutely, that's what he's looking at. And tips, overtime, and Social Security benefits, tax cuts would happen. That's going to reduce the income. That proposal is extremely popular. Yeah, people always want that free lunch. They want the tax cuts, and I don't disagree because I don't really like what they're spending my tax dollars on. They waste an awful lot of them. However, there is no such thing as a free lunch. The problem is he doesn't have it paid for. So that goes into that deficit spending. And we're already near $2 trillion in deficit spending that they're talking about, because I'm sure there's a lot of hidden stuff and off balance sheet accounting that we don't really know what's going on. But all of those tax cuts, and they have like a trickle down impact. They reduce the government income. But then finally, the one that, frankly, this is kind of my favorite one, not because I think it's such a good thing, but because it's absolutely fascinating to watch. I mean, whether you realize it or not, we are absolutely living through the most interesting time in history. This is one that they will be talking about for hundreds of years, because we are making a complete and total transition. And so what do we need? We need a huge crisis to push that through. Now, we've been talking about all of what's been going on throughout the system and how vulnerable the system is. Now let's remove some more regulations, because that's going to make it better. No, it's going to shift a lot of income. We're going to take on a whole lot of debt. But Wall Street drafts Trump's wish lists over bank capital and SEC regulation. So remember, mark my words on this, Basel III Endgame is dead. That might have created the crisis, but it's going to be even bigger when it happens. So we'll look at what he's talking about. Reversing Biden-era limits on energy projects, and he can do that on his own. And he can also exit the Paris Climate Accords, which also is very inflationary, and ease regulation on the cryptocurrency industry. And of course he's going to do that. He owns a cryptocurrency company, and his son is now going into venture capital, and happy days are here again. Yay. And remember, how do they make these transitions? They make it seem normal. And that's what this job is. But the speed at which the transition team and industry are moving to identify potential regulatory relief underscores how aggressively the new administration could move. So that's going to be very interesting to watch. We're going to be talking all about it. And look, here's the reality. It wouldn't have mattered who got in this office. We would be more than likely having a lot of this very similar kind of conversation. So we are just watching it and get into position to benefit, because this is the kind of thing that happened back in 1929, right? Happy days are here again. U.S. banks to gain from looser capital and merger policies under Trump. Yes, they are looser capital. Well, we are already living in an era where banks don't have to hold reserves for your deposits. So if we have even looser capital rules, what do you think is going to happen during this next crisis? I mean, I seriously want you to think about that, because, how do you catch a wild hog? You do it slowly, and you put each piece of the fence in place until they're trapped. They lull you into this false sense of security. And so look at what happened to bank stocks. I mean, in addition to the rest of the markets and the meme stocks and all of that, it's because what the expectation is lots more free money. But understand it's not really free money. This money is created from debt. And when you have that debt, you either have to service it, you have to pay it off. So service it means you got to make the payments. You got to pay it off entirely. You got to roll it over, or you're going to default on it. Take your pick. So when you know that you're going to declare bankruptcy anyway, and you get a new credit card in the mail, what do most people do? They go out and spend, baby. And that's the anticipation here as well. Looser capital requirements, a lot more risk. This is like an earthquake for bank mergers and acquisitions and bank regulatory policy. And let's think about these mergers and acquisitions as well, because all we really have is the illusion of choice. You walk into a grocery store, it seems like there are thousands of food companies in there down every single aisle. But in reality, because of the mergers and acquisitions, not just it's been in banking, it's been in food, it's all over the place. You're really only looking at a handful of companies that are producing all of this with a different label, kind of like Republicans and Democrats. Right? They have a different label, but they've all been moving us in the same direction. All of them. They've all been destroying sound money principles, right? It was Lyndon Johnson that took us off the silver standard, and he was a Democrat, and then the Republican Tricky Dick took us off the gold standard. Doesn't matter. And we're too far gone. I've got news for you guys. There isn't one human being on the planet that can make a difference in what we're going through, because we are at the end of this big experiment, and it's going to go out with a huge bang, more than likely very similar to 1929. But banks would have fewer constraints and be able to use more cash for lending. They always talk about lending. It's about gambling or share buybacks, right? I mean, what do share buybacks do? They enrich large shareholders. And guess what? Once that money leaves that corporation, it is not there to get you through the next crisis. It's like using up your savings and then your car breaks down and you have no money for it. Well, more debt. And ask yourself, how much debt can I grow before that becomes a problem? Because if I owe you $1 million, I got the problem. If I owe you $10 million, you got the problem. You see what I'm saying? We've got the problem. There's absolutely zero doubt about it. And what are banks likely to do with it? Well, we talk about derivatives, right? And this is the most current report. It just goes through the second quarter of 2024. I can't wait for the third quarter to come out. But this is the notional amount of derivatives in the FDIC insured banks. What does that mean? This is the notional amount is the amount that the two parties have agreed that these things are worth. But not one entity, not the FDIC, not the IMF, not the Fed, not the World Bank, not BIS, nobody, and they all admit this openly, knows the true value of what's at risk. And that's why that word notional is so critically important, because the markets are making nominal and notional new highs. But the value of the currency is also making real new lows, right? You can buy less and less and less with these, in this country, dollars, but I don't care where you are in the world. So let's look at this, because banks are trading more derivatives today than during the great financial crisis, but what they've done is they've compressed them. So that actually even hides it more than 2008, right? It's all about appearances, and let's just see. Because what are derivatives? Well, they're derived from something, hence derivative. but then they have no relationship other than the price action of the underlying. You cannot convert your derivatives into the underlying, and it's leverage bet, and God knows how much leverage it is. The last time I looked, in many cases, and it'll vary, the leverage was 1,000 to 1. So if a bet goes wrong, what do you think is going to happen? Right? I mean, just think about this logically. So there's 2007 and the derivatives, and here we are, 2024, and the derivatives significantly higher. Plus, they didn't have that compression in 2007 because they didn't invent that till 2013. I've shown this many times in many videos. But hey, you know, do yourself a favor. I give you the links to all my research. Go to the Office of the Comptroller of the Currency, the OCC, and look at their quarterly report on derivatives in the FDIC insured banks. Because we think that everything is so safe, except over the last year and a half or so, we've been watching the banking industry starting to implode, haven't we? So I think that too will look very similar to 1929 regarding the runs on the banks, because once you realize that your bank is not safe, what does that insurance give you? Any insurance policy, look on the contract. It's only as good as the claims paying ability of the counterparty to that contract. So if the bank is upside down in their bets, there's no money there, guess what doesn't happen? And they've been testing this right along. And remember, this last recent test on a bank failure, 50% of the uninsured deposits did not get bailed out. So they're setting precedents. They're getting ready for what they know is going to happen. Because the other part that I want you to look at, and this was something that the Dodd-Frank Act was supposed to take care of and eliminate, was proprietary trading. Well, that means trading to make money. It's just a bet, right? Well, guess what? Even down here, dealer trading. Down here, right? That's held for hedging. That's supposed to be legitimate, and it is legitimate. A hedged bet is, let's say I'm a farmer and it's January and I have a crop that's going to be matured and go to market in September. And I have no idea what's going to happen with the weather, with the water, with the crop. Is it going to be a good crop? Is it going to be a bad crop? I don't know. So I'll buy a derivative. I'll buy a futures contract to guarantee a minimum amount of income so that I can stay alive. That's a hedged bet. And you can see not many are held for hedging. But what the other part is trading. And the regulations are about to become much more loose. And I'm hoping you can see this problem, because we've got this iceberg that all we ever see is this little tip, and it's all this crap underneath that's really dangerous. We can't see it. We can't see it. And even those that are regulating the banks, they can't see it. They can't see it. Food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. We have entered a very dangerous phase. And yep, happy days are here again for a minute, and people are going to be responding to it. It's just like if you go out and you get a new credit card and you buy a new car and you buy all this stuff, and your neighbors are looking at you and going, wow, you must be doing really well. But then what if you lose your job and your income declines? You're going to lose the car, you're going to lose the house, you're going to lose everything. And it's no different than what I'm showing. So you really need to be ready and prepared for that. Because I want to just remind you that U.S. regulators chide 4 big banks' living wills. And the FDIC escalates cities' concerns when this was June. So they have no credible plan if something goes wrong. Everything will topple. And it's the Wild West right now. It is totally the Wild West. The Federal Reserve and FDIC said Bank of America, Citigroup, Goldman Sachs, and JP Morgan Chase failed to show how they could safely unwind their derivatives portfolio. They can't. Warren Buffett calls them weapons of financial mass destruction. Because they're these huge leverage bets that nobody knows what's going on with them. Even the creators, they make them so complicated that you don't ask, well, I can't understand that. So, hey, if you don't ask, they don't have to tell. But the problem is that they make them so complicated that they don't even know what's going on with them. And that's not me just being really negative. That's me stating a fact from all of the data that I've read. You really have to think about this because you have to become not just your own central banker, but your own community. And this is why the local community is so important, because that's what's going to enable you to weather this storm. We're stronger together than we are as individuals. Do you think, I have people come on my farm all the time and they're all like, wow, when do you have the time to do? I don't. It's my community around me, right? We all need community, every single one of us. We are not an island, and we need to take advantage of this opportunity to build the community while we can. Because the reality is that the SIFIs, systemically important financial institutions, that means that when one goes down, everybody's going down. SIFIs are more leveraged and dangerous. I just showed you some of the SIFIs in the U.S., but this is true on a global basis too. More dangerous today than in 2008. This is dangerous. But what also happens with spot gold, right? Gold hastens retreat as dollar rallies on Trump victory. Now, why would gold hasten its retreat? Because while the Fed wants you to think that this Federal Reserve note is money, well, actually, this is a $1 coin, okay? So this is fiat money. This is sound money. I'll get something bigger so you can see it. This is sound money. It's the same coin, just the flip side, right? So if the dollar is getting stronger like I showed you against the yen, that's how it impacts the spot gold market. This is a great time if you haven't done it and you need some asset protection gold. This is a great time to be buying the asset protection gold. So things like this, which is a pre-33 1-ounce gold coin, or even this, if you're so inclined, because everybody's got to do what they're comfortable doing, okay? This is going to follow the spot market more. I'm not sure what the premiums are doing right now, but I can tell you it's a great time to be loading up. And whatever it is that you're doing, please get it done. If you have not already called us and put your own sound money strategy together, please do yourself a favor and get it done. Please, please. It's so important. So I want to show you something, though, because one thing I've discovered over all these years is that I can look at the same thing over and over and over and over again, but depending upon what I'm looking at, I just look at things a teeny bit different. And that's what I ask everybody to do. Just start to look at things just a teeny weeny bit different, because when you do that, it's amazing what you see. Now, what we have here is a relative performance chart. And I didn't do this on this, but I'll explain it in a second. So that red line is the spot gold contract, and the blue line is the US dollar contract. And so we can see right here how, dollar up, spot gold down. But what I also saw when I looked at this as compared to all the times that I've looked at this relative performance chart over the years, guess what? The exact correlation between the US dollar and the spot gold contract is breaking down, because we may see it for a minute, but this doesn't look fully correlated, does it? It used to be. It used to be. So what I'm trying to show you, what I'm really trying to help you understand is where we are in the system. Because people will think that we have all sorts of time, and they'll think that they're going to know like 1 second before and be able to get in position. No. You know when I became a prepper, and I wasn't a prepper before this, was 2008. In 2008, I watched the system die. Watched it. I was getting ready to retire. I was going to travel, go live someplace for like 3 months, and then learn how to do the regional cooking, learn how to do the regional art. That was going to be my retirement. And there I am watching the death of the dollar and the currency, and not just the dollar. It was the death of the whole fiat money system. And I went, holy crap. I did not think that I would see it in my lifetime. I didn't. So I'm telling you, that's when I became a prepper. That's when, instead of that little 2-bedroom condo, lock the door, off I go, no worries, that I bought a larger property with a house big enough if I had to take my kids in, to take my kids back in, because I sure couldn't do it in that little condo. And I couldn't grow food there. And food becomes the single biggest issue for most people during these transitions. And we can certainly see that happening around the world. You need a foundation. You need a foundation of sound money. But you also need security in food, water, energy, security itself, barterability, wealth preservation, community, and shelter. Get it done, please, because it would break my heart for any of us, anybody, even those that are not believers of it. It will break my heart to see people go to bed hungry at night. It will break my heart if we are suckered into this new surveillance system and we lose all the rest of our freedoms. Because we've lost a lot, but they do it little by little by little so that you don't realize how much more narrow your world is becoming. How do you catch a wild hog? You lull them into a false sense of security and you catch them. Don't be lulled. The stock market going up, sure, it's risk on. Crypto market's going up, yeah, it's risk on. Do you really want to take that risk? And if you do, make sure you do it in a diversified way. We are going to be live from Australia next week, and it'll be at 2 p.m. Mountain Standard Time. So this is going to be fabulous. And make sure, let's have a lot of conversation in all of these videos. I probably should have asked you for that in the beginning, because it helps the algorithm send it out to more people. And we really have to grow this channel. We have to grow these live events, and we have to come together locally and globally in community, because 100%, I absolutely know we can make a positive difference for everybody. And maybe, just maybe, we can have sound money back in our system again. So until next we meet, please be safe out there. Bye-bye.